Okay, so today is December 7th, 2025, Sunday. And, going forward for these YouTube videos, I'm just gonna record my whole week and then break down and what I'm gonna be doing for next week in order to become profitable instead of actually sharing all the videos. I'm still recording them on Loom just for myself, but for YouTube purposes and just for me to watch, I think it'll be easier if I just record the analysis of the whole week that I did, what I learned, and what I failed at. So the first thing is that I'm gonna pull up my journal. So I've been using this companies to journal my trades, and this week we'll start off of Monday. So Monday I took a trade, and pretty much I took one at S&P. So I took a sell because of the double top, and what happened was that it just took me out of break even. So right here, look, I put notes as looking to buy S&P New York session, currently bullish. There's a liquidity of sellers on top. Price currently is in consolidation, waiting for it to reach the 4-hour key level, 68% fib level, right? That's what I did. So I said I looking to buy, but I took a sell actually, and it took me out break even because I saw this 2-hour head and shoulders, and the buy was here, right? But I took a sell, it took me out break even. I also took I was also looking to sell UJ. The overall trend was bullish. There was a counter trend line, and I wanted to take the sell. So this is UJ, and I'm still in the sell. I got in right here. I put my stop loss here, but now it's at break even. But now I'm just holding it. I want to see what happens to this trend line. If it just rejects the 27 extension, I might re-enter. Other than that, I'm still holding this trade. I risk like $30 in my regulated broker, so it's like I'll make $90, which is nothing, but I'm trying to be consistent, and I think it'll help me down the line. So for Monday, I think it was fine, right? S&P took me break even, and UJ I just sold it because all the confluences lined up, and I'm still holding it. So let's move to Tuesday. For Tuesday, I didn't really record it, I guess, or it didn't save, but I took the trade on S&P. On the right side, you see there's a lot of minuses. So I think I took a sell or a buy. Um, and then, yeah, it just took me out really. But I counted as break even because it was $251. It was nothing. Let's go to Wednesday. Wednesday was a good day for me. So I took an S&P trade. On the right side, my confluences, it was max 2 trades. I did not overtrade. I did not do revenge trading. I followed the rules. I stayed disciplined. The risk reward was 1 to 3, and confluences lined up. So S&P right here, there's a trend line going bullish. Price rejected off, this key level. That's one. Number two, it also, key level trend line, right? And then this lower high or lower low, it didn't really reach. So I put my stop loss all the way to the bottom just to be safe, and yeah, I won this trade. Looking back at it, let's see what I actually wrote. Price is consolidating. It has two options. You can either take out the high and drop, or it can first drop to the trend line and then go up to the highs. Wait and see. Won the trade. Price rejected the key level, bounced to the trend line, and I scaled in. So I took an entry, and then I took another entry like that. You can see right here how many entries I took. um, but yeah, overall, I could have put my stop loss a little bit lower to this low and got a better risk and reward. And most likely moving forward, I'm going to take more aggressive trades. But other than that, let's go to Thursday. So Thursday, I took a loss. And the reason was, oh yeah, I remember this. So for S&P, it was consolidating the whole week, and I was looking to buy it. And then, it took me out basically. And then I re-entered, and it took me out again. It happens. So here's my first trade of S&P. I took it on a 15-minute time frame because it bounced off a 4-hour key level, and there were two of them. The direction was bullish. I had a target to the highs. And what happened was that before market opened, price just went all the way bullish with Marabuza candle, and then rejected and went down to the key level, and that's where I bought it. But it just kept going down, and I lost the trade. So right here, Marabuza candle right here, it went all the way up, right? and then it kind of rejected. So I put a fib from here to here, and I wanted to buy the 38 to 50% extension, but in reality, it just collapsed, right? And I took another entry and I also lost it. The second trade was that I saw it again. It retraced the Fibonacci of 50 to 61% and it retested off a 2-hour key level. So I entered again, and then I wanted to let it ride all the way to the top, but it took me out and I got 2 losses. So from this, what I learned is that I guess not that much really, because it was my confluence, my biases. I stuck to my plan. I just lost the two trades. So I stuck to my rules. I didn't overtrade. I didn't revenge trade. I lost the 2 trades, and that was it, right? I said, okay, I lost it. That was it. And now let's go to Friday. So Friday was also a good trade, in which Friday. So before market open, what happened is that price rejected off at this level, key level, right? And this 4 hour right here, and it just went all the way up before 9:30 a.m. That's when usually the market opens. So this happened at 8:30. So I was reading a book and I saw that my alert, but I didn't really pay attention to it because I trade 9:30. But what happened is that prices rejected and went all the way up. So when New York opened, it basically retested this key level again, and I got in for the buy, and it was like a 1 to 2.6 risk reward or something like that. And then, yeah, this is the overall trade that I took. So I missed it. So the S&P trade, I usually take it around 9:30 a.m. when market opens, but I did get an alert at 8:30 a.m. where price hit my alert of hitting the 61 extension. There was a 4-hour key level, and also price is bullish, so there's liquidity on the top. So therefore, it was a buy opportunity, but I didn't take it. But moving forward, whenever price hits my alert and all the confluences matches, I might get in earlier and I'll experiment and see how it goes, because price did just reject the 4-hour key level in the Fibonacci between 50 and 61.8% and went all the way up, and there was a good stop loss that I could have placed as well in terms of actually winning in a trade or getting a good entry. Re-entered, so I missed the first trade in the first screenshot, but then the second screenshot, what happened is that price retested the key level, which it just broke and actually rejected from there. So I drew a fib, it rejected 38% fib. I entered a trade. I took it from 1 to 2.65 risk reward, but I did make money overall and I did win the trade. So moving forward, I realized that I should be risking more in order to pass the challenge, because I've been stuck at 1 or 2,000 for a while now, and it's 100,006. So from now on, I'll be risking, instead of 500, I'll be risking $800 per trade and see how it goes from there. But yeah, I'm very happy with this trade. I'm happy that I entered. I held it. I didn't get out. I didn't get scared or anything like that. So yeah, the second screenshot, I re-entered, I bought it overall. And yeah, I do want to increase the risk that I have. So right now in my prop firm account, there's 102,381. The goal is to hit 106,000. And then I want to pass it before December 31st. That'll be the goal, and I'll be happy. But let's do the lessons learned. So December to December 5th, I took 5 trades. I lost 2, break even 1, and then I won 2. I forgot to do that. 1, 2. So 5 trades. Moving forward, I want to be able to get more aggressive trades in S&P, especially since right now my balance is 102,000. My goal is to pass phase 1 by December 31st, and I need 106,000. Take 1 to 3 setups, risk $500 per trade, max 1,500. I would need 3 or 4 trades to pass. If it's not in a row, 4 to 7 trades. If I lose, but if I take the max 2 trades a day, maximum loss, it will be 1K, but I can make 1.5K back. So I'm still deciding if I should risk $500 or $800. If I do risk $800, it has to be like A+ setups, right? So maybe if risk 800 has to be A+ setup. If not, then risk 500. Right, so I just have to see which one it'll be. And then, yeah, if it's $800, then if it's a 1 to 3 risk reward, it'd be $2,400 in profit. $500, it'll be $1,500. So I just have to see what happens to the market. But yeah, overall, this week I think it went good. I learned a lot. I stuck to my rules, of course. That's the most important part. And yeah, so I'll update you, next week analysis and how it went. But I am confident. I'm getting better, and the whole point of this is just to be consistent. I don't care about the money right now. I do want to pass the challenge, and the whole goal is to be consistent, stick to the rules, and then 2026, January, February, whenever banks actually start, trading again, that's when the market will be moving very beautifully because right now it's just consolidating. At 2026, I'll be ready to dominate the market and make a lot of money, and most likely not buy anything because I'm minimalistic. So most likely I'm just gonna keep the money and give it to my family, and then put it on my other business. But other than that, that's the goal. I'm happy with this week, and then yeah, I'll see you guys. I'll see you guys next week.